Hello, it's Bruce Youngblud, PensionSolutionsCanada.com. We're going to talk about pension options. We have done work with OMERS, the teachers, some universities, some of the auto companies, Ford, GM, McMaster, OMERS, I mentioned, Johnson Controls, Suncor, Petrocan Lubricants. The list goes on. Normally, you're offered three choices. You can take the company pension. Some employees don't want to take the company pension because the day you turn 80, is the company still going to be alive, or if they left the country or gone, out of business? So that's the key issue there. Take the company pension. God bless you. Enjoy your retirement. We work with people who would rather move that pension over to a Canadian insurance company via the copycat annuity, which means you get paid the same pension, except instead of coming from ABC Corporation, it comes from, let's say, Sun Life Canada. Option three is not always available. It's commuted value. A commuted value is, as one fella said to me colloquially, I just want to take the cash. Well, that's the cash. That's where that's from. Okay. So the commuted value, the capital moves out, and there are tax implications, which are very important. You want to work with somebody, make sure you're not paying too much tax. And then we help you to manage that capital so that you're paid out a pension as good as or better, plus more flexibility. So there's 1, 2, 3: company pension, copycat pension, or commuted value. Beyond that, there are issues that arise, like, hey, do you have any RSP room? What are we going to do about that? Your spouse has room. Can we impact? Can you reduce your spouse's tax going forward? So at least the family saves some money if you have a partner or spouse. Beneficiaries, you're leaving money to your kids, so to speak. Or somebody said to me, they'll get the house. Okay, let's talk about it anyway. So those are some of the items. This is meant to be generic, so I'm just going to go over high level. Company pension, I mentioned a little bit, and that is simply you sign on the dotted line and retire, and boom, very soon, within months normally, you're collecting a monthly pension. You will be aware, but of course, many pensions reduce at age 65. The assumption is that the government pensions start then, which doesn't have to be the case, but that's the assumption built into the pension plan. There's no age limit. I mean, you can work to 48, 58, 68, sign on the dotted line, and bingo, you get your pension. The second and third options, the copycat pension and the commuted values, there's often an age restriction. First of all, let's look at OMERS, for instance. If you're beyond age 55, you only have one option: company pension. I believe the cops and the firefighters are age 50, beyond which you cannot take the cash. You cannot take the commuted value. Another item is the okay. So let's so watch the age, and if you're 49, find out today what the limit is, what the restriction is, because I had a call recently from someone who was 58, and I said, well, it says right here on your pension document you've got to decide by age 55. Oh, well, can't we do anything? No. 55 means 55. Anyway, these are big financial decisions. Make sure you know. So what about the copycat annuity? First of all, a copycat annuity is simply where you tick box B, and it says that capital, the pension money, the cash, the shifts over to a Canadian insurance company, who then take the liability of paying you a pension as long as you live, and your spouse or partner as long as they live. If that's the case, that's the norm. So you're dealing with somebody like Desjardins or Sun Life, Canada Life. They're going to pay you, and those are Canadian companies. Number one, they're financial institutions. Number two, they're not going out of business. And additionally, there's an insurance policy behind Canadian insurance companies that for further support. One thing about that, the copycat annuity or copycat pension is dependent on the choice of moving a commuted value somewhere. So I have seen instances where, commuted value, yes, but for some crazy reason, the pension plan won't allow you to move the commuted value to buy a copycat. So again, there could be restrictions. These are big dollars. It's often said, and you've heard, your house is your largest financial asset. Well, guess what? Your pension plan is up there too. So be sure you know the details. And if you're not sure, give me a call, 15-minute free Zoom call. We'll go over, your pension. So number 3 is the commuted value. Take the cash. So you tick box C, and the capital behind the pension, which might be one this week I saw was $354,000. We commonly see $500,000, $750,000. Numbers can get higher, substantially higher than that. In any case, whatever your number, let's pretend your number is $750,000. That you tick box C, you chose the commuted value. That means that your money's leaving the company, leaving the pension plan. It's going to go over to a Canadian insurance company, to an investment fund, the way we operate, an investment fund, or a GIC. GIC rates are coming up. Let's keep those in mind. I've seen 4.5, and they're probably headed higher with the Bank of Canada and the U.S. Fed going up recently. So don't drone on here, Bruce. The restrictions, as I mentioned, some are at age 50 and you have no choice, age 55 and no choice. We've done a lot of work for the auto companies, and there's no restriction, no age restriction, not the ones that we've seen. Anyway, so you want to take the commuted value. So it'll come out as some locked in money and some cash. You say to me, wait a minute, I got lots of RSP room. That's good news. So we'll shelter some there. By the way, some companies allow you to ship your money directly into an RSP. Some do not. Some say, nah, too complicated for us. We'll issue one check for the locked in and another check to you, cash, boom. And then you have less withholding tax, 30%. And then you ship some money back to us by an insurance company, an investment fund, and basically ultimately recoup the tax. Anyway, we can talk in more detail. So what did we say? Age restriction, manage your money. We tend to find that on the commuted value side, you need, depending on your situation, between 3 to 4.5% generally rate of return, annual rate of return. Our funds are doing 7 to 8, even in this market in 2022. Buy low. Okay. Thanks very much for watching. Watch some more videos. Give me a call. Bruce Youngblud, Certified Financial Planner at pensionsolutionscanada.com. We have 25 years experience in the financial services business and are backed by a massive department of tax and estate planners. There's no question that we cannot answer or get answered for you. So bring on your questions, jump on the Zoom call with me, and we will go into detail on your specific situation. Thanks for watching. I'm Bruce Youngblud, a Certified Financial Planner at pensionsolutionscanada.com. and dundasfinancial.ca. So hope to talk to you soon. Thanks for watching. Good day.